2023 was a unique year for real estate, and so I wanted to send you this video to do two things. Number one, I want to bring you up to speed with where we're at right now. But number two, I want to show you some unique opportunities that we have coming up in the new year. So if I had to describe what happened in 2023, I'll say it was pretty much gridlock. You didn't see a lot of activity. On the buy side, we saw interest rates spike to a 23-year high, and that scared away a lot of buyers. Now, there were still buyers out there that had to buy or they had to move, but we also saw a handful of people that got great deals on real estate because others were not buying. Now, on the sales side, we didn't see a lot of people wanting to sell their home because they locked in such low interest rates over the last couple of years. You did see some people selling because they simply had to sell. But for the most part, there were not a lot of people selling. So for the transactions for the year, we were down drastically. But for the most part, there weren't a lot of people transacting. So the overall numbers for the year were actually down quite a bit. Now, as far as home values go, we didn't really see massive increases or decreases there just because there was not a lot of transactions. Now, of course, every market is different, but in general, we saw home prices remain flat or just go up or down by a few percent. As we kick off 2024, here's where we're at right now. We've seen mortgage rates pull back from the highs that we saw in the fall, and now they're anywhere from 1% to 2% lower to start off the year. Now, I don't expect mortgage rates to come crashing down, but I do expect them to gradually maybe go down a little bit more as we progress throughout the year. Remember, the mortgage rates are usually a future dictation of what they think the Fed is going to do. So if we think the Fed's going to lower the interest rates later this year, this is why we will start seeing mortgage rates come down in the near future. Now, as I said earlier, home prices have reached an all-time high. So if you bought a home in the last couple of years, you're probably sitting pretty with a lot of equity in your property. Here's where I'm seeing the opportunity there. If you're someone who's carrying a lot of debt, like car payments, credit cards, consumer debt, there's a great opportunity right now where you can take advantage of that and maybe tap into some of that equity. I put together a quick calculation that'll show you how much equity you have and if it's worth it for you to possibly think about tapping into that equity. We've actually already done this for a few select clients, and the results have been pretty amazing. For example, we helped a family just a couple of weeks ago. We took several consumer debts and credit cards that they're paying on. We were able to tap the equity, consolidate them all into one new mortgage loan, and they're saving anywhere from $500 to $1,000 a month. Now, everybody's scenario is going to be a little different, so we put together a few questions that we can ask that will let you know specifically if this is something you should look further into. Just click the link, answer a few of the questions. We'll do a quick evaluation and see if it's worth it for you or if this is something we should wait on. Now, if this is something you don't need help with right now, but you know someone who might benefit from it, please pass this email along to them. I would be happy to help anybody in your network with getting the right answers. And as always, I'll be keeping you updated as we move throughout the year and we're watching the interest rates. I hope you have a happy new year, and thanks for taking time to watch my video.